Hello traders, Nick Shaheen here looking at Palo Alto Networks, PANW ticker. Reported earnings today is the 5th September, Thursday. And tomorrow, Friday the 6th, is the end of the week, obviously options expiration, all of that. But they reported earnings overnight, and the stock got hammered on the headline and then flipped and closed up 5 and change. So from low to high is probably $35, $35, because it fell to 180 and then rallied right back up. The high of the day was definitely a lot higher than 180, about 218 and change. So this is the daily chart, and I just want to try to make sense of it. This is more so, it's not a trigger alert for Palo Alto itself, but it's a way to look at charts and see what we can discern from it. Sorry about that, got interrupted. Now I lost my train of thought. But anyway, I think if we look at the chart here, we can learn a lot from the chart itself for this instance, and just how I look at charts, or the proper way of looking at charts. Now, I'm a fundamental trader, meaning I don't like to bet on something with a lot of money unless I have a good grasp of their fundamentals and the macro. But I'm also a convert into thinking and believing that the technicals rule the price action. And even if I even if I was sniping an entry in whatever stock, I should look at the technicals before I take a position or short it. So at the end, there will be a little subscribe button that pops up on the top left to the YouTube channel. Hit it. It's free, and it would get you on the email notification whenever I do a video. So here, the daily chart doesn't tell us a lot as to the short-term price action. For that, I would have to go a little more granular, albeit in this case, given the big jump, it's going to be hard to give you specific levels to trade unless you're really active in trading it. So, but this is a 1 hour chart. So immediately we can see the range where they wanted to fight it throughout the day. So if I were to chase up or down, the two limits I'm looking at immediately are the 218 and this one right here, 205 and change. Visually, you can see where, let's see here, the lines lie and what the extensions of them would be. First of all, if I'm long throughout the day, I would make my exit point right here. So if I got long somewhere here and this is rallying back up, and if I'm lucky enough for it to get to here, I'd lighten up. Why? Because it's going to be resistance until the bulls prove that they can break up and trade above it. So conversely, if it falls below this line, then I would, chances are it's going to carry lower to the next level that means something, and which would be this one. Now this level means something for a lot of reasons, one of which is this yellow line tells me that it's a point of control, meaning the bulls and bears like to fight it out for whatever period of time I was looking at here, which is at least a month. Now, if I was short it and it's falling and it gets here-ish, I'd book my short a little bit or trim it or be ready to trim it, because same as the bulls, onus is on the bulls up here to go above it and trade higher. Onus on the bears is to go below it and continue on lower. Why? Because it's been a pivot point. So whatever happened here, they got to it, this zone, and they fought it out. Let's put it this way. So once they get back to it, they're going to fight it out again. So whoever fought here, they're going to fight here. So congestion. So it's like support on the way down, resistance on the way up. Same as here. They fought it out a lot. So when you get back to it, they're going to fight it out a lot, and that's why it fails right here. It's not a coincidence that it failed right here. So this concept works on any time frame. This one is an hour. I'm going to go back to a day. Okay, so this is the same chart. I haven't changed anything. Is this 1 year? Yeah, this is 1 year worth of data. I'm going to mark it up and speak to it with the same logic. So if you wanted action points, I just gave you the action points of what I would chase, where I would book up here, what I would chase down below, and where I would book the short. and where are the congestion points. One was the failure of today's high, and obviously, so looking at it and trying to come up with the same logic on a daily, clearly this is a pivot point of sort. Why? They've been bouncing off of it. Let me see if I look left, if I see something else to it. It's been a pivot point. Look at this point right here, this point right here. So they were falling out of bed. They try to hold it. They continue falling out of bed. So roughly about halfway, a little more than halfway of this whole correction down here. So, and then they flew back up. So this was clearly a, oh my goodness, okay, an inflection point. So watch this, right? Right? So this is an inverse head and shoulders. You've heard head and shoulders, it's bearish, bearish. This is the opposite, so it's bullish. Now, technicians will probably draw the thin line where these lines touch, and they tell you, no, this was not a proper, regardless. I know I can draw one here, but here's what I see. I see the bears saying, I can send you down. And the bulls say, nope, I'll send you back up to a contention point. And then the bears say, you know, I can do it the same way, and they do it, and they the same thing, and they do it, and they overachieve relative to this one. They go down here. And the bulls say, you know what, I can defend it just like last time, and they come back to the point of contention. 1, 2. The bears say, I can do it again, and they fail to match the middle one. So now we have 2 shoulders and 1 head upside down. And they came back to the same point of contention, and the bulls, onus was on the bulls right here. Right here, onus was on the bulls to jump up and close above it so they can do this just like I showed you earlier here. And they did. So this means that the bears were tired, the bulls will overwhelm them. In this case, it was a heck of a run. But look what's going on here. So remains to be seen if this is the opposite of this. So for exactly the same language, only flip everything upside down, bulls, bears. If they lose this zone, and that's why they're fighting it hard, they will do this. How far down? Usually, the technicians will tell you it's as high as the deepest part, I think. So visually, it's somewhere down here. I look left to see if there are spots where they would stop. And I can clearly see here areas that they would stop. So there are support zones. The low of the after hour dip, which is 180, whatever, that would be one place. But I think there are stopover points higher than this. So you're saying, oh, it's impossible. It's not going to go to 170. Well, it doesn't look that possible from just the daily chart. By the way, I'm not calling for this. I'm just saying if I'm long, that would be my bug out moment. So it doesn't look like it's possible that they're going to be down here. First of all, they were down here not too long ago. That was the Christmas crash zone. What if I go to a 5-year chart? Now we're looking at weekly candles. Now suddenly, hey, you know what? It is possible. So over 5 years, the place where they fought it out the hardest was 143. That's that orange line. That's based on the volume. So if you want something to learn on a chart, learn the volume profile. So this tells me that this area is where the value area is. That's where most of the action happened, specifically around this line right here. So all of this is yet to take a hold and move the whole price action line higher for the last 5 years. Now, if I zoom in time, yeah, this orange line will move up higher. So more recently, it's closer to here than here. So I do have that orange line. I drew this one. I drew it for a lot of reasons. And boy, now I remember. So watch it. So this was the bug out moment that I just said, right? And I said it's meaningful from before. And look how meaningful from before it was. Look at this poke right there and this roof right there. So resistance until it's not. They broke above it. They tried to hold it. They held it. They tried to hold it. They failed. They came back to it. Inverse head and shoulders. We just talked about it. They went through the roof. They tried to hold it. They succeeded. So support and then support with a question mark. Okay. So that's not it. All of it, I should say. Look left. Look how significant that level was back then. Talk about a spanking right here on a you know, slam, triple top, whatever they call it. Boom. They took their time to come back to it, and they jumped above it. So clearly, it's not an easy level, and clearly the bulls and bears like to fight it out, which is good news. If they're fighting it out, it's support until it's not, and then whoosh. So these were fast candles. This luckily consolidated that, so now they got it out of their system. Otherwise, I would say that this zone is weak hands, but they're not, because they fought it over. So they're no longer fast candles. There's been a lot of consolidation here. So it's not out of the question that if this neckline breaks, maybe the whole market corrects, and this one's not going to stay up there all by itself. This is a point of interest. So if this levy breaks right here, they're probably going to get to 160. I'm not calling for it. I'm just showing the logic behind how I would look at charts. Let me see if I can look at it differently. I'm going to zoom in a little bit on the same candle and then smaller time frame. So now we're looking like 3 years or a couple of years. So now, you know, the point of control moves a little bit closer to reality, but still it's not as high as I want it to. So it is very logical to expect that it could dip at least to here. Not calling for it, but it could happen. So a good bounce off of a horrendous reaction is great on those earnings, but they're not out of the woods. Okay, so here's an earnings where they skyrocketed and then they gave it all back up. Here's one that they spiked and then decided, you know what, maybe not yet. Here's an earnings where they spiked and gave it back up. So the least I could do is not chase right here. Onus is on the bulls to prove they can go. So where's the good news? So I talked about the scary part. So if I'm long, what do? I'll put a stop, first of all, wherever my gut tells me. If I can withstand pain to here, then I'll put my stop here. If this is where I'm okay losing to, this is where I'll put my stop, maybe here. So how about on top? This would be a good point to chase, maybe 1, maybe 2. This is definitely resistance. Okay, this is another ledge. So I call them these accident scenes. Once you get back to an accident scene, so here they fought it out and then they fell. That was an accident right there. Boom, crash. They took their time. That's good when they take their time. They get back to the accident scene. Whoever fought it out here, or whoever got stuck long here, they get back to even. They go, thank goodness I'm out. So that causes it. It's not the end of things. It was ideal. It's less than ideal that they went back straight to the whole range. It would have been ideal if they did this and then tried to tackle it again and then broke above it. But that didn't happen. So the worst kind of thing happened, which is get back to, you know, all efforts lost. And now they're trying to build back up to it. What's going to happen when they get back to the accident scene? There's going to be another fight like this one. I'm not saying that's going to be outcome. Maybe they do this, they fail the first time, then do that, and then look at what we have. Now we have an inverse head and shoulders, just like the other one that got them over the hump. And then they do this, and then whoosh, to the moon, Alice. Okay? So I showed you the scary parts, and I showed you how it could be good, what's going on here. But it will need the help of the whole market, I bet you anything. Because if the SPY or if the market is doing this, Palo Alto Networks is not going to be doing this all by itself. So, you know, assuming that the markets hold up, Palo Alto has some opportunity above. I don't want to start longs until I see them go above certain levels, and that depends on personal. At least the first level is 220, I'm going to call it. It's 219, yeah, 220. That's the first one. The second level to see breach is 223.7. So let's call it 224. This will cover this angle. That's 225 here. But I don't start chasing here because of these. Last time I got to this accident scene. Dang, you know? So I would, you know, if I were drawing charts and I want to refer to them later, I'll probably put a box right around this zone right here. And I will extend it left and right to remind me that this was an accident scene of sorts. And I'm going to put it tight so it's finite. You know, this way I remember it visually. But it's also good to see that, to remember that, you know, there is a path higher from here, as there is a path lower. So tight range, big candles within it, stuff can happen for the long term. Now let's see on the fundamentals. If we looked at the technicals, I doubt that the fundamentals are cheap. It loses money, and it's 8.5 times sales. So it's not cheap, but it's not bonkers either. To give you an idea, 8.5 times sales, that's about 3 times as 3.7, 3.5 times sales as Amazon. And Amazon is expensive. It's 75 PE. Apple is a lot cheaper PE, not very cheap times sales. So it depends on what you're looking at, but just to give you a gauge. So it's not bloated. Companies like Beyond Meat and all of those, they're like hundreds of times sales. Their price, their stock price is like 300 times sales. I'm just picking a number. It's up that high, people. Pot stocks too, they're also up there. So it's not bloated, but it's not cheap. Okay, so it all depends on the growth it brings. If this is a growth company, they have to prove that they're a growth company. I don't look for cheap. They're supposed to spend a lot, they'll grow a lot. But once they start slowing down with the growth, I'll start asking, wait, why are you so expensive still? Then I should evaluate you as not a growth company anymore. So anyway, Nick signing out. If you have any questions, let me know.